So trading forex and other leveraged securities, it can be an attractive proposition due to the potential for super returns. It's just normal, right? However, it also carries a number of significant risks and harsh realities that traders should be aware of. The first one is that high leverage can lead to significant losses. One of the main features of Forex and other leverage securities trading is the use of leverage, and which allows traders to control like really large amounts of money with a relatively small investment, right? However, while leverage can like magnify your profits, so to speak, if a trade if you trade against a trend or a trade goes against you, you can lose more than your initial investment. Yeah, and then you have what is high volatility in the marketplace. Like all these people love to trade gold. I've seen beginners like trading gold in the NASDAQ and all these things. Like, man, slow down. Get you started in the forex market, right? Because prices they can change rapidly in a very short time frames, which they can lead to sudden significant losses. And there's also complexity. Trading is forex, anything in the markets, it's pretty complex, and it does require some time and understanding of the financial markets and different trading strategies and indicators and fundamentals and technicals, and it's not something that can be learned overnight. Okay, and even experienced traders can make mistakes. So the other inherent, I guess you would say, harsh reality of trading would be emotional stress. It's pretty emotionally stressful. It's one of, I think a lot of people struggle with, but particularly when you're losing money, right? And it can lead to a poor decision making, like revenge trading or chasing losses or taking on like way too much risk by like just adding more positions, or dollar cost averaging in when you probably shouldn't be, if the signals aren't really there and you're waiting for a miracle to happen. And but there's that kind of pours into the risk of over trading too, because we get tired. You're going up against a lot of different people in the marketplace, right? Throughout the day, there's like a new employee coming in for this shift and that shift and this shift. Meanwhile, you're on a full-blown 24-hour shift throughout the whole day. So I know it's easy and accessible to trade, but you can overtrade, and it can lead to like lost focus, like poor decision making, and a lot of increased transaction costs because you might end up just pulling the trigger at the wrong time and just no good. Also, there is some drawdowns in a lack of regulations, especially with a lot of brokers. While major forex markets are regulated, there can still be a kind of a lack of transparency, I guess, and potential for manipulation in the market. So, some brokers may not even be regulated. You need to make sure they're an ECN broker, right? Because if they're not, it can increase the risk of fraud. I've personally had accounts, which I got go unnamed, but when you're starting to make a lot of money, they don't want you to withdraw it all at once. And so, yeah, I've had some issues with that. Market manipulation, as large financial institutions can influence the market. Okay, we call them market makers. We'll talk a little bit more about them, but it makes it pretty hard for individual traders to compete unless you know their tactics. There's also counterparty risk, and this isn't really talked about too much, but this is a risk that your broker or on the party on the other side of a trade fails to meet their obligations, right? There's risk involved in that stuff, man. And it can be particularly problematic, like if you're doing over-the-counter markets, other than like, which are less basically centralized exchanges, right? So you need to be careful and very, very careful with who you select. Also, liquidity risk is an issue as well. I know it's one of the most liquid markets in the world. There's like 6-7 trillion goes through it every single day. Okay, there's times when liquidity can decrease, such as during like a lot of like news events or before, right? Or around the markets are opening and closing, or when the brokers, I should say, are opening and closing, right around 5 p.m. Eastern New York time, right? So what they do is they'll open spreads, and it can just, they can trick you and hold you into overnight, so they can open spreads. They'll go take profits. They won't release you. They'll open their spread so far you can't take your profits, even though I've seen them open 25, 30, 40, 50 pip spreads. It's ridiculous, right? And you just need to be careful with that because that risk is there. We were watching that anomaly, in fact, my members and I, and it was nuts. And then, okay, we got economic and political events. Okay, so anything out of the ordinary can happen. A disaster can occur, right? Just out of the blue. And that is going to be greatly influenced by something like that, right? So, like, changes of interest rates is also another one, or, economic data releases, news releases, forexfactory.com, right? You got to go there every day, check it, see what kind of pairs are going to be, look at, and then maybe look at the different geopolitical tensions between countries. This can, it can cause extreme market volatility. Just look at what happened when people started boycotting Bud Light over the whole Dylan thing, right? So it makes it difficult during those times to predict price movements, great. So all of those factors can make, and the reason why it's difficult is because sometimes those are the times when they're going to do like this massive reset. So they just whipsaw the prices all over and you're going, what is going on? We've all been there. So there's some geopolitical going on that you're missing. You got to pay attention to that stuff. Stay tuned in to Bloomberg. So all these factors, you guys, are like make trading Forex and like other leveraged securities a high risk activity. So it's good to know that up front, right? But the most important thing is crucial to have a solid understanding of these risks and to have a well thought out trading plan in place before you actually start trading and practice it. Well, you got to have that trading plan, and that's what we did for you, man, here at Trade with Banks. We figured it out, and you're learning it step by step. So let's keep going. I'll see you in the next one.